What's up, traders? How you doing, friends? I want to talk to you about April Fool's week in the market, right? Today is April the 7th. I want to talk about the upcoming week and 5 ways I'm looking to protect my gains in this market. And we'll talk about why I want to protect my gains, but I think a lot of people, when they think about options, they don't realize that there are ways to hedge with options. You can use options to your advantage. And we're going to talk about that today. Let's take a look at this chart right here on SPY. I think you've seen on, like, if you're following on Twitter or social media, you see like we bounced off of this EMA, I don't know, like the 20 EMA like 5-6 times, and everybody's going, well, we're going to bounce off of it again. And we very well could bounce off this again, right? But we had a really big day of selling. You see these orange lines here I have. It's just like a bearish engulfing candle here. This does look like a sign that we are looking to pull back, especially if we take out this candle this week. We don't, if you are a bull, you do not want to see this candle taken out this week. You had increased volume, just super bullish going back a couple of weeks, just taking out some volume. You know, we are up there. So I want to talk about 5 ways I'm looking to protect my portfolio. I want you to think about these. Even if you don't have huge gains in the market, we can still talk about this. There's still things to learn. We're going to talk about a few stocks to begin with, but I did want to jump over to the economic calendar just real quick and remind everyone that we do have core CPI on Wednesday. CPI has been this huge topic, especially since we're fighting inflation for the last couple of years, it feels like. So beware, you have a CPI, you also have FOMC. So Jay Powell is going to be releasing some meeting minutes, and we have some jobless claims and some PPI on Thursday. So Wednesday is a big news day. Just make sure you're aware of that. Let's jump into one of my favorite strategies. The first thing I want to talk about is, do you see like Costco? I'm in Costco, I'm in Amazon, I'm in Google, and I just want to talk about this. And if you're not in these, that's fine. This applies to any stocks that have options, okay? But do you see this move? Like, here we are from December to, where are we, in April now? The stock has gone from 560 all the way up to 780, back down to 700. To me, I don't know where the stock's going. And you don't have to know where the stock's going. If you bought it at 500, or 560, or if you bought it at 600, maybe you bought it at 700, you can protect your position. If it's trading right now at 713, you can protect your position with something called a collar. We talk about selling covered calls all the time, right? So if you were to go here and you were to sell this covered call at 725, you'd be selling right into a couple moving averages on the daily chart. And if Costco goes to, 780 or 800, then you're losing your shares at 725 for whatever premium you collected, right? I think everybody kind of knows about covered calls, but that's just really briefly what a covered call does. So I am capping my upside here with this covered call. But what I am looking to do, and what I have done with Costco, is I put on a collar. So I sold a call and I bought a put. And the reason I did is because, to me, this just looks like, I don't know if you're into wave counts or not, but this looks like an ABC correction. I would love to get some Costco, maybe down here, 600 all day long. But what I did was I sold a covered call and I bought a put. So yes, if Costco goes to 800, I am selling my shares right here at 725. If Costco goes down to 600, I have a contract to sell my shares at $705. And I'm going to jump over to the options chain right now. I just want to show you what this looks like on the options chain. I want to show you what I look for when I'm trying to sell a call. To sell a collar. And I am saying sell a collar. You can buy a collar or you can sell a collar. Let's jump over here and just take a quick look. We'll type in Costco in the search bar. And we have earnings coming up, but I usually generally look for 45 DTE. So right here is 40 DTE. That's just fine with me. And this is not my major account, so you're not going to see my positions here. Just not really comfortable sharing that on the internet with a bunch of strangers. But so here's the position, right? You're going to sell a 725 and you're going to buy a 705, and they'll pay you $1.40. So you are collecting $140 to let go of your shares at either 725 or 705. So if Costco keeps going down, right? If it keeps going to 670, you have an agreement to sell your shares right here at 705. You are locking in your win. You cannot lose here. Hindsight, is Costco going to 750? I don't know. If it does, I'm selling my shares. It's 725 plus the $1.40 that I collected. So like 727. Okay, I rounded a little bit. Give me a little credit here. But I'm okay with this position. You can change this. Like maybe you aren't comfortable getting called away there, right? Maybe you think Costco's going to 730. Well, this is a debit, right? So this would be calling buying a collar because you're paying $67 for that. But you can also, move your protection down a little bit. Maybe you don't want to sell at 700. Maybe you're okay selling at 705. You want to sell at 700. I don't know. Maybe you want to come way down here and you can move things around. You can adjust this however you like. You can take a look at your deltas. You can see that, if you're getting a credit, if you're not getting a credit. I look at my deltas. I look at what these two options are doing. And I also look at the charts to determine that. And I'm going to give you another example. Next, let's take a look over at JP Morgan. For those of you guys who followed me over in JP Morgan, if you've been following my Discord for any time at all, you can see like I bought JP Morgan at 128. It's trading at $200. So for every $100, for every 100 shares, you can just multiply that by, 100. So like, what is this? $50, $60 times 100 for every 100 shares. So my cost basis for JP Morgan is down here. Okay, JP Morgan has earnings coming up. I personally think JP Morgan is going to crush earnings. I think that they're still making money with the interest rates the way that they are. But I still want to protect myself here. I am just fine letting go of my shares that I bought down here at 128. So let's just say 130. So like $70, $7,000. I'm fine letting my shares go here. That's just a risk that I'm willing to take. But what this is called is a super collar. Because see, I have the covered call. So I'll sell my shares. I will sell my shares here. I will protect myself here. So I am saying, hey, I want to get rid of my JP Morgan at 195. But I tell you what, I'll buy it right back. See this? Do you see the support here? Little support here. I know it's not a lot. Could JP Morgan go all the way back down to 172? It would make sense. It really would make sense. But this position is going to be set up for a credit. So this is also selling a super collar to protect myself and to keep my earnings, to keep my gains over earnings. Now, the only thing here is that I have a $5 wide spread, okay? So this gives me a credit, and this credit's bigger than the cost of this. What this does is this protects every super collar that I sell for the 100 shares. You really need 100 shares to sell a covered call. So don't do it if you don't have 100 shares, of course. But I'm protecting myself from $500 right here of $5 times 100, $500 of a potential loss. And I'm just going to buy them right back here. So, if it drops down to 172, then my shares get sold here. I buy them right back here, and I take a little bit of a shave on my shares. But like I said, I really think the banks are going to do well. We're in a high interest environment right now. When they start cutting rates, sure, that could be a headwind for this stock. For me, I am going to set up a super collar on this. I actually already have a super collar set up on my shares. And let's take a look at what that looks like over here in our broker. You can see earnings coming up really soon, right? And you can choose, once again, I'm just going to show you the closest to 45 DTE. And this is a much closer super collar, right? So, you can make your mind up. Where do you want to sell it? You want to sell it 210? You want to sell it 200? I would give myself a little bit of room. Like you see the expected range here. You can sell a 210 covered call, and you can get that $5 protection, right? I'm selling my shares here. I'm buying them back here, and I'm getting paid $28. And you're like, $28? That's nothing. That is protecting just think about this $500 that you're protecting yourself with, right? Look, max profit 528, because you're actually protecting your downside. And depending on how you set this up, you can make it wider. You can pay a little bit of a debit and make $926. Look what our delta moved to 44. So like, it just depends how bearish or how bullish you are. Me personally, I'm bullish on this stock. So I'm okay with just making a $500 profit if it does, for some reason, tank on earnings. If it goes to 230, I'm getting called away at 210. That's just how it is. But if you were bearish, you could do something like this, right? And look what happened to your max profit. So you can look at the chart. You can make up a $10 wide spread, a $15 wide spread. You can move your covered call to however you want. Look, I'm collecting $268 with this particular trade, but I am capping my upside here. If, I think it's 197 right now. So like if it trades up $5, I'm getting called away on this position. You can probably roll it out for credit, but that's a discussion for a different day. I just wanted to bring up these two different scenarios, callers and super callers, right? So I really think that Costco is going to be pulling back. Looking at a caller on this one, JP Morgan, super caller, I'm willing to buy it back. You can do the same thing with Amazon, right? You can pop into the earnings chain and you can set up a caller here. You can probably set up a 188, 175, and just protect yourself. I like to sell callers. You can pay for a debit, but just realize that when you pay for a debit, you really need the stock to move. If the stock stays in between, I didn't bring this up, but like if the stock stays in between here, nothing happens to your position. You just keep your shares. You can just keep doing this over and over again. There's ways to manage this. You're not always locking yourself in, but I wanted to bring that up because I think it's important. And another way that you can definitely protect yourself in this market after this huge run up is you can just buy debit spreads. You can buy puts, go out to like same expiration. So you can buy as wide as you want, like, right at the money and, sell like a $10 wide spread, $5 wide spread. It's really up to you. You can just kind of look at how much delta you're getting. What I like to do is look at my portfolio, beta weight it to SPY, beta weight my delta to SPY. So if I have like 100 delta, maybe I want to take off 25 delta, right? If my total portfolio is like 100 delta and I feel like, hey, I'm up 30% for this year, which I am, and you know what? I just want to take off 25 or 30 delta out of 100. You can set up some spreads, and you can set up one spread, right? You can set up one spread of 20, 25, wherever you want to go. Like if you want to pay $500 to make $1,300, you can do it that way. Or you can set up some smaller spreads, right? You could set up a spread here in the 45, and depending on your time frame, maybe you come over here to the expiration right before and you just set up another spread over here, and you just kind of start adding up some of your deltas, and you just get the delta that you want. Make sure the risk to reward makes sense. We're getting some weird marks here, but it's after hours, so just understand that. But you can do this if you're a heavy tech guy. Maybe your portfolio is mainly tech. You can do the same thing on the Qs, right? You can come over here and just do like a small spread. It's up to you. Maybe you just want like 7 delta or 10 delta difference. Come over, pay a little bit more, make a little bit more, change your delta up to 15. But this is another strategy that I do is I look at my overall delta of my account and I hedge a portion of it. Personally, I never go negative delta. I know some traders do. It's your personal preference. I would rather do my third option, which is go to cash. Cash is a position, especially when you have SGov or BIL paying you 5%. Treasuries right now are paying really good premiums of yields. And look at this. I mean, just straight up, right? But I know that's kind of a deceiving chart, but this is free money. This is a headwind on stocks right now because it's free money. So cash is a position. Like I said, if you don't want to pay money for the debit spreads like I was talking about before, because more than likely my debit spreads will lose. I'm fine with that, right? Because if I have 100 bullish delta and I reduce my delta by 25% or even 30%, then I still have bullish delta, but I'm also making some money on the downside as well. I'm just looking to protect myself. And another way that I really like to think about protecting myself now is to look for some bearish trades. We're setting them up in our Discord. If you haven't joined, I really don't know why. goodkidstrading.com/join. Free access, showing all my trades for you. Some of them win, some of them lose. We have a community of other people sharing their trades as well. It's not trade advice, it's education. All of this is education. I'm just showing people what I'm doing, okay? But like I've been looking at some bearish trades, just plain bearish trades to give me negative delta. If you're in tech, like I said, the QQQs, you can look to short XLK. You can use shares. You can use they have options as well, so you can set up spreads here as well. I like charts like this that look like they're in the process. I'm already in this one just because I needed some bearish delta, but there is really and truly nothing wrong with a trade like this. And you're just looking, you know, you can put this is a conservative trade. Looks really good to me. You can look for trades like this. Like if we take out, and you want to move it down just a little bit, but if you take out this big bearish candle, look to short it to the next moving average. Same thing with consumer discretionary. Like I think this is another really nice trade. I'm in this one already as well, just because of the risk reward. I shorted half of this candle on Friday. I took half of it. If this starts bouncing, I'll just get out of this for a small loss. I'm not going to look to actually get stopped out here. If somehow Monday comes and it's a huge trade and I get stopped out, that's fine. I have, like I said, have more bullish delta than I do bearish delta. I also just kind of look for individual stocks that look really weak to me. Just looking strictly at the chart, Amgen is a short. This is like a 1, 2, 3 down. There's really nothing down here except for my purple line, which shows some previous support resistance. So like this looks like a really nice short to me as well. These aren't trade ideas, but I might be taking these. Citibank, it's an international bank. They don't really benefit quite as much from our high interest rates that they're charging. So to me, this looks like a possible short. It also looks like a flag. So don't really love this one quite as much, but find a chart you like, look short, and take the trade. It can be that easy. You can, like I said, you can set up collars, super collars, debit spreads, short trades like this. Cash is a position, okay? That's 5 ideas that I'm using right now. I did want to jump over here and talk about some dividends as well, and then we'll wrap this up. But we have some interesting dividends coming up this week. We talked about this in our Discord as well, but I like to go in and buy companies that I like and collect a dividend, okay? But I like to buy them low. I like to buy them low and sell them high. And you're like, well, what is low? What is high? And you kind of look at the chart and you're like, well, GIS is kind of in the middle. And it is, to me, like that's the way I see it at least. So we have a dividend coming up on Tuesday. It's a 59 cents, so a little under 1%. And, I'll be looking at this one on Monday. I just want to see what the market does. I do like how it's holding up on the moving averages. This might be a position where I'll buy 100 shares and I sell a cover call right at 70, 71, wherever the strikes are, and just look to collect a double dividend and try to get out of this before the next earnings. I think this is a good trade, but you have to be willing to own this for the long term. This could go back down to 64 and you might be selling premium. You might be selling cover calls to try to reduce your cost basis. We talk about this in our Discord. Check it out. Darden Restaurants, do you see how it's closing below all the moving averages? We have another dividend coming up on Tuesday, $1.31, 156 stock, so not even 1%. I'm staying away from this, and this is based off of closing below moving averages. I don't like when stocks start closing below moving averages. It needs to regain this really quickly before I would ever think about it. There's no way I'm touching this. I'm just giving you an example of something I definitely would avoid this one. Not trade advice again. This is just the way I think about it. I've been doing this a while. It's worked for me. I think it can work for you. AbbVie, I love this stock. Don't get me wrong. I love this stock. I loved it all the way through here. I loved it through here. I tried to chase it through here, and then it just started getting too expensive for me. I need it to come back down to the moving averages before I can get in. Again, this looks like another short to me, but they do have a dividend coming up on Thursday, Friday, 155. I don't know. Is the stock going to be at 155 by Friday? No, it's not, but could be. The chart looks really weak. If it takes out these two candles, there is some support here, but I'm going to avoid this one just based on what I was talking about earlier. I like to buy low and sell high. What is low? Like low to me is down here in between these two moving averages. I don't think it's going to go all the way back down to 130. I mean, anything's possible, right? Abbott Labs also looks a little bit better, to be honest with you, but this very crude drawing that I did with my mouse is a head and shoulders pattern. I am currently short this stock, and they have dividend and earnings right after the dividends. So like for me, I don't like to see earnings on a Friday and 2 or 3 days later you have earnings. You could have a really bad, nasty gap on earnings. I don't think we have to go back too far to see. Well, maybe we do. But I don't like to trade dividend stocks over earnings. So just keep that in mind. I don't know if we have any spam lovers out there. Spam is in high demand. If you haven't noticed, we've gone from 29 to 35. I will tell you, this looks really promising to me that it is holding above these moving averages. We do have a dividend coming up. It's only 28 cents. It's a $35 stock. So once again, it's not quite 1%. Will I take this trade? You can check out the Discord and find out on Thursday. I wouldn't get in until Thursday anyways. I think this is a potato chip company. Again, I'm just seeing like lower lows, lower highs. I'm not chasing dividends here. I'm not chasing them, not when cash. I don't want a 5-cent dividend, 6-cent dividend on a $17 stock when I can make 5% in SGov or BIL. I don't think I showed you guys BIL. These are just these are different ways to where you don't actually physically have to buy treasuries. You can just get it in them here. Look, same chart, right? It looks extremely bullish because it is. Like this is a headwind for stocks. I know I brought it up, but that's what I'm looking at this week. There's 5 ways that I'm looking to hedge my portfolio. I hope some of these help you. I know they can. Options do not have to be gambles. You can use them to hedge your account. You can use them to make money. You just need to start thinking outside the box. And that's what we're all about at Good Kids Trading. I know I keep saying this over and over again, but we have a Discord. We have an awesome blog sharing all kinds of ideas, obstacles to keep you from obstacles that all traders have. We talked about our small account. Dr. Eric talked about how much money is needed to start investing. Check out the blog. We're working on more videos, and I will catch you next week.